Michael, if I interpret Mr. Buffett correctly, it's that he's saying basically he can't identify any value right now. Why should that surprise us? Because value is almost hard to perceive when you don't know what the underlying prospects of a company are.
I think you're exactly right, Tyler. You know, Warren Buffett's comments echoed some others that we've been hearing on CNBC from, I think, some real leadership in our industry. Jeff Gundlach last week on Halftime Report, and Mohammed El-Arian almost consistently every day on Squawk Box this morning have both basically been saying, hang on, we're waiting for this economy to work its way out. And while there is good news on the disease, indeed, there's good news there, we have to invest based on numbers. The numbers seem to be getting worse, and we need a clearer picture before we start to commit capital. I heard Buffett say that. You know, I've watched him for decades now, and through every one of these downturns, you wait to hear for that Buffett news that he's been buying this stock or that stock or adding to this position. And I also remember 1997 and 1998 when people used to say, that poor old Warren Buffett, he just doesn't get tech anymore. Maybe he's past his prime because these dot-coms are the way of the future and poor Warren doesn't get it. Poor Warren usually gets the last laugh. I figure he will this time, but it's a good word of caution for all investors, Tyler. Take your time, and if you're going to buy, be opportunistic and make sure that there are solid balance sheets and there's some real there to get you through perhaps what could be a more difficult market.
Yeah. Yeah, you know, nothing happies the heart more than an 87, 88-year-old man who is still investing for the long term, as Warren Buffett is. Rachel, let me turn to you. Michael said, you know, there's good news on the disease front. Well, yes and no. There's good news in the sense that remdesivir gets an approval for a sort of fast-track emergency use. But case counts are going up, and there are projections out today that perhaps death counts are going to rise markedly here in May and June. That would be quite a reversal to those who have put money behind the idea that the economies are going to open up and things are going to return relatively quickly to something approaching normal.
So, Tyler, thank you. I do agree that watching the spread of the virus and subsequently the spending by individuals as well as corporations in the future is going to be the key to seeing how well and how quickly we can reopen this economy. You know, there's two schools of thought. The optimistic school of thought is that by reopening, we're going to be able to do so relatively successfully with perhaps herd immunity protecting us, and that our consumer behavioral patterns will not markedly change for the long term. But we then have to be very cautious that with the second wave, what will that bring? And even if you do open, will we have consumers there? You know, there have been many surveys. University of Michigan just had a survey where the majority of their respondents reported that their biggest concern was their health. And at a very minority level at 13%, it was more about isolation. So we're starting to see behavioral patterns that are not about getting out, but more about health and the health of the individual.